All right, now joining us in studio, he's in the top 1% of mortgage originators across the country. He hosts a radio show, The JJ Show, and he is here on The American Dream to talk about the market, interest rates, and a new program, 10-day close program.
10-day close.
Exciting. Sounds exciting.
It is exciting. I'm pretty excited about it. It seems like, well, let's talk about interest rates real fast.
Yeah.
Right?
Well, let's talk about your radio show.
Radio show's going great.
Okay.
It's great. Dan McAllister on here. I love Dan coming on my show, asking people for money, especially when it's tax time.
You know, it's funny how a guy can be so likable, but really he's trying to get your money for taxes.
Oh, without a doubt. He's a great guy. Wealth of knowledge, too. I've had him as a guest on my radio show, and that's really what I try to do is just empower people out there, give them some knowledge, inform them about real estate, finance, good cause, try to get some community events and charitable events on there, make people aware of it. So
you can catch on KCBQ.
KCBQ, Thursdays, 7 p.m.
So check out the JJ Show on your drive home.
Yeah.
All right. So the market, we were just talking with Dan about interest rates, and he's talking about short-term rates, and I was like, I better get JJ in here. Talk about what's going on with mortgage rates. I know they've creeped up a little.
Yeah, since post-election, mortgage rates have crept up, right? So, we lost, pretty quickly a good chunk of mortgage rate, long-term rates, How
do people behave? How do clients buying homes, refinancing, react to that? What's the psychology?
Yeah, there's two psychologies. One is I'm going to pull back and wait for interest rates to come back down. The percentages of people doing that right now are not great because there's nothing really pointing to interest rates coming back down. Right. Everything is pointing to interest rates going up. So if anything, it instills more of a panic in certain people. Inventory levels for purchasers, you got to move. Like, let's get in now before rates, we lose ground. And depending, let's say you got pre-approved for $500,000. Your purchasing power diminishes as interest rates go up.
Right.
So, if you're in love with a certain price point of a home, you might have to get in quicker than waiting.
What do you think the health of the housing market is right now?
I think the housing market's great. We just need more inventory. But that's been a story for a couple years now.
Doesn't it seem like we've been talking about this low inventory thing for so long? It's like, why even say it? It's like the norm. It really is ultimately a seller's market because there's so many few homes.
Yeah.
So many few homes, if that makes any sense. But there's so few homes
for sale
on the market.
Yeah, it's true. And it continues to be that way. And I think that's, leading into, and mortgage rates, they're still great. They're still in the low fours. I think from a refinancing perspective, people that are in adjustable rate mortgages, if you have a second mortgage, a line of credit that has adjusted, now becomes a 25-year P&I payment, principal and interest payments, gone up $600-700. Maybe you can roll those together and the blended rate makes more sense on a refinance. So there's still opportunity for people to
Fixing
refinance.
the rate in,
definitely.
Paying off debt, home improvement.
And just, we're in 2017. A lot of people took out adjustable rate mortgages in 2006 and 2007. So those are coming due, and those payments are going up. The margins are set, but those indexes, which are tied to those adjustable rate mortgages, have started to hit highs in a long period of time. The one-year LIBOR climbed over 1% for the first time in many, many years. So people are going to see their payments going up. It's time to fix that into a 30-year or a 20-year fix.
10-day close.
10-day close.
The skeptic in me doesn't believe it. How do you do a 10-day close?
Yeah, so it's interesting. So technology, right? I'm a late bloomer to technology, as you know. I used to roll in with my BlackBerry and pop it on the counter. And
you're old school relationship, shaking hands, using a phone like this instead of like this.
That's right. But that being said, the reality is technology is taking over everything in the world, and it's not taking over the mortgage industry, but it is making things easier. And it's a smoother process depending on what type of borrower you are.
Sure.
So why do a 10-day close? That's why do we even need it? In an area like San Diego where inventory levels are pretty low, it gives the buyer now the advantage when you're putting in an offer to a seller that needs to sell or wants to sell.
It's practically a cash offer if it's that fast.
That's the thing. It mirrors a cash offer. You can go in there and say, hey, you know what, I can close in 10 days. It's it makes your offer that much better than someone else that says they can close in 30, even if they don't want to close in 10, right? Now, how do we do it? Technology. So if you're a W-2'd employee, we are using third-party companies to verify income. So instead of collecting a bunch of documentation up
Digging
front,
into paperwork and all that.
we're streamlining it. Your
Okay.
W-2, we can verify that. We can pull that information direct from the company. We can verify it. Bank statements, instead of collecting 6 different accounts of bank statements, we can use a third party to go right to your bank, verify those assets, and eliminate the need for a longer underwriting period and more paperwork for the client.
Well, there's a lot of people who are watching this show that have been through that arduous process
Yes.
of having to verify your firstborn to
Yes.
get a mortgage loan. You know, but I want to make clear as well. So this isn't saying like the old days, stated income, no docs, loose lending. It's still the normal conventional FHA, VA type financing. It's just a faster technology, not we're skipping and doing subprime loans and making it
I'll
easier.
clarify it even further. So this is for a conventional loan that meets Fannie Mae guidelines only. So it's going to limit the scope of people, but the number of conventional loans that get written is tremendous. I mean, it's a huge percentage of the overall pie. So let's say $612,950 loan and under that meets Fannie Mae guidelines. The borrowers are W-2'd employees that we can verify their employment through a third-party means. That is the borrower, the consumer, that is going to meet these guidelines. So if you're stated income, or, self-employed, not stated income. We don't have stated income loans. If you're self-employed, you own a bunch of properties, you own a bunch of companies, this is not the program for you. However, we might be able to streamline a part of the process for you with this 10-day close program. So we're going to be launching this mid-February, and I'm pretty excited because it's going to help the consumer eliminate some of that paperwork mess if they fit this program.
Yeah, and I think a lot of consumers are looking for that solution because of the things that were required of guys in your position. Not to mention that, you mentioned the consumer. What about the realtor who's writing up offers on behalf of the consumer? It's going to empower them with quicker turn times, which makes the offer that much stronger in an environment that has low inventory and you're getting several offers on the table. When you see one that says 10 days versus one of the big banks, it's going to take 30 to 45 days. And then, of course, the ability for you to do your job and lock in the rate, manage the market as well. It's awesome, man.
It's a good deal. I mean, if you are that person that's getting pre-approved, we can figure out if you can qualify for it, and then we can put that language on your pre-approval letter and really put you as a buyer in a power position writing those offers.
Awesome. Jonathan Jerotz, host of radio show on 1170 AM KCBQ, the JJ Show, mortgage expert, helped us understand rates, the market, and this new 10-day program. Awesome, man. Well, good luck with it.
Thank you.
Keep doing what you do.
Appreciate it.
All right, more of the American Dream coming up next. Stick around.